Ladies and gentlemen, welcome tonight. We are having our monthly webinar here at Management One. We have a fabulous webinar for you tonight, and we're anxious to get started and give you some really great information.
Thank you so much. I appreciate it, Ron and Kristen and Tyler, for having me today. Thank you for everyone for attending. I'd like to start the segment we call, it's a condensed version, but it's called Set Your IRA Free. Our goal today is to talk a little bit about, self-directed IRAs and, again, how they can impact and grow your wealth in real estate, or your retirement wealth through real estate. Disclaimer, we do not provide any investment advice or endorse any products. All the information and materials that education you'll get from tonight is strictly for educational purposes. So, we encourage you to consult with your attorneys, accountants, financial advisors before entering into any type of investment. So now that I've got the boring legal matters out of the way, let's jump into what we hope you take away tonight. One, a little bit about us as a company, Vantage. Two, what is a self-directed IRA? What are the investment options available to you? And quickly, going over what are the prohibited transactions. So what I like to call what you can't do and who you can't work with. And then lastly, is a self-directed IRA right for you? This last question is more an internal question, really something we hope you walk away saying, is that right for me? A little bit about Vantage. It was founded by the second most handsome man in our company, our CEO, Mr. JP Dada. It was founded in 2004. And since then, it's right under 18 years we've been in business. And we're the leader in self-directed retirement plans, administering right under $2 billion. So that number's gone up in assets under custody, while personalized service to over 7,900 clients nationwide. So you don't necessarily have to live in Phoenix, Arizona, where we're located to do this. You can live anywhere in the country. And we'll talk more about being able to purchase inside and outside the country. So as you can see, kind of the services we provide is, the self-direction, the facilitation of self-directed IRAs. It's our job. As we mentioned before, we're not financial advisors. So strictly our job is the custodian. So and the record keeper. It's our job to make sure that all of the records are kept in a timely and accurate manner. Any uninvested cash, you're protected up to $250,000 through the FDIC. We offer free educational workshops. You can just visit our website on vantageira.com. And we also offer a monthly newsletter, which talks a little bit about industry insights and also some company news. I apologize. I feel like I'm rambling through that. So let's start here with a little bit of industry misinformation. So one, IRAs were created in 1974. So the first year you were really eligible to to contribute to an IRA was in 1975. And since then, here are some of the kind of modern day fallacies that we've come across. One, you can't buy real estate with your IRA. You can't invest in a private company with your IRA. And if you want to do that, you got to take a distribution, which is a taxable event, in order to purchase an alternative asset. And lastly, you personally can't control your IRA. So we're here to tell you that stock market-based investments are not your only option. And so from 1974 to now, there hasn't been a new law that's come out that say, hey, now you can do this or now you can do that. So from the beginning of time, you've been able to really do this. It's just that it hasn't been made aware to everyone that you're able to do this. So these fallacies or perpetuation of misinformation over the last 40 years has made our jobs harder on the campaign trail, as we call it, our campaign awareness, to making sure that people are aware that they can do this. So, what is an IRA? And it's simply just a trust. So we usually will go over in a little bit more detail, kind of what some of the benefits that offer outside of an IRA that a trust has, but it can do pretty much the same thing. It's a tax deferred or a tax-free vehicle that is created in the United States for an individual for the sole exclusive benefit of that person or his or her beneficiaries. And so people are like, oh, well, I've never heard of a self-directed IRA. Well, a self-directed IRA is not a type of IRA. It's really a marketing term in which identifies who and how the IRA is going to be managed. And so we talk a little bit about the IRA And an IRA with us is no different than you would have an IRA with like Fidelity or Schwab or TD Ameritrade. The difference is the assets that you can custody in an IRA with TD versus us. So TD or Fidelity, they deal in the traditional side. You want to buy stocks, bonds, mutual funds, ETF, publicly traded REITs, which are real estate investment trusts. You can do that on their platform. But if you wanted to say, I want to buy 123 Main Street, which is just a single family residential real estate property, they'll tell you you can't do that. Or really what they mean to tell you is you can't do that with us. With Vantage, we would just open an IRA for you, which allows you to purchase real estate, private companies, and so on. So as you can see, there's not a self-directed IRA. It's the same IRA. We're still, eligible to the same tax reporting requirements, the same contribution limits. It's just the assets you can custody are different. So there is a lane for the both of us to navigate, meaning Fidelity and Vantage to navigate in. And there's no crosshairs. We don't custody traditional. They don't custody alternatives. So a little bit more about that when we talk about who does what. A lot of the times, because this is such a new, most of the time it's very new. It's the first time someone's ever heard about this. So they're concerned. They're used to, well, I have a financial advisor at Fidelity. He picks my investments. So I think I'm just going to do this with Vantage. But the problem is we're not financial advisors. So we don't pick your investments and we don't direct your money. So I like to go through this so clients understand like who does what. So it's our job, as you can see on the left side of the screen, for us to do the reporting. As the record keeper and custodian, it's our responsibility to report to the IRS your contributions and your distributions. And those are reported on the IRS Form 15498 and 1099s. It's also our job to receive any of the investment income and pay any of the expenses on the investments. So real estate's a great example because to buy the rental property, that's the investment. Well, depending on the type of rental property you have, it might be located in an HOA or might have all properties are going to have property tax due. It's our job to make sure that those are paid. Now, we're not property managers. We're not going to tell you if a tenant misses the rent. But it's our job to say, hey, it's time to pay this property tax bill. Can you please give us the authority to do so? That's where the self-direction comes in. We will not do anything until you yourself directs Vantage. So as the client, what's your responsibility in this? Well, it's your job to find and source the deals that you desire to make. It's also your job to provide a fair market valuation annually. Now, what is a fair market valuation? Unlike Fidelity, TD Ameritrade, every day at 4 o'clock when the stock market closes, usually you can log into your account and it'll tell you your balance, and it'll always have a little thing that says as of 11/17/21, because at the market close, all of those things are being traded daily. The IRS's requirement saying, listen, you can purchase any asset you want in the IRA. We just require you to provide a value to us once a year. That's it. So that is a fair market valuation. It's providing a value of the asset, or actually of the IRA, once a year. But you're providing the value of the asset to us, and it's on our job to provide that value to the IRS. It's also your job to provide all the documents to process a transaction. Now, Daniel, I've never done this before. How do I do this? We're never going to leave you on an island. We'll tell you what we require. We'll tell you, more than likely where you can get it from, but we can't fill it out for you. We can help you through it, but we can't do it for you. So again, having a good understanding of who does what always makes for a good partnership. So the best part? What do you want to invest in? So again, this is a real estate driven workshop. So of course, we're going to lead off with real estate. There are 3 ways to purchase real estate. You have your direct purchase. I have all the money. My property's $200,000. I got $200,000 in my IRA. I'm going to buy it. You can partner. Tyler and I both, have $100,000 in IRAs. We want to partner and buy this rental property. He'll own 50% in his IRA. I'll own 50% in my IRA. That's an opportunity available to you as well. Now, leveraging. You can also get a loan in the IRA. Take a step back. I know a lot of people's eyes probably is like, whoa, I can just put 5% down and get a loan. No, it's not going to be what we're used to, which are 5% down conventional loans, or you won't qualify for any FHA in an IRA. So ultimately, the way this works is called a non-recourse loan. And the lending parameters behind that is the maximum loan to value on a property they will lend is 65%. Some banks. We have a resource list of people who can assist you, but in some of those, it's 65%, meaning your minimum down payment's 35% of the property. They like to see sometimes 10% in reserves. Now, I've seen them do it for less, but for all intents purposes of this, representation, let's just keep it with the 10%. So you would need in your IRA 45% of the total value of the purchase price of the property in order to leverage a property in your IRA. Very easy. Another quick formula I always use: to buy a $200,000 property, you would need $90,000. Now you can finagle that formula however you want, but it works basic like this: 70% is your 35%, 70,000 is your 35% down, 20,000 is your 10% in reserves. Add it up, there's your 90,000. You can take that formula and manipulate it however you'd like, but that is able to give you something to play with if you have some IRA money and you're interested. Private lending, great option for a lot of clients who maybe they don't have $200,000, $300,000 in their IRA. They have $75,000 to $120,000. Well, you can privately lend. Someone who's a fix and flipper, someone who needs to, maybe they want to get involved and they want to buy property. You can finance that and, secure it by the deed of trust or secure it against the property. You have a secured note and an unsecured note. Secured, collateral; unsecured, no collateral. Easiest way to remember it. Also, you can invest in private companies. Private companies could be a company that goes out, buys real estate. It could be a local mom and pop restaurant down the street. All of those things you're eligible to do within your IRA. And again, joint ventures is something you're also allowed to do. So let's talk about what you can't do. So, since, from 1974, again, the IRS didn't sit down and say, all right, houses, can they buy houses? Yes. All right, check. They didn't do that. What they decided to do was instead, because there's just a plethora of things that you can use your IRA for, they decided to just sit down and tell you what you can't invest in. And it's really two asset classifications. One, a life insurance policy. Two, collectibles. Why a life insurance policy? An IRA cannot be the beneficiary of a life insurance policy. Simple. Collectibles. It is very hard, as you can see in some of those, and we'll talk about that little asterisk next to this coin, but it's hard if you notice: work of art, antique rug, metal or gem, alcoholic beverage, a stamp. It's very hard to associate a fair market value with those antiquities or antique items. Funny story, my uncle was the president of information technology for Sotheby's. And for anyone that knows Sotheby's, they're one of the biggest auction houses in the country. He lives in New York. I live in Phoenix. We talk every day when he get out of work. Hey, Dan, you'll never guess today what sold. I'm like, what? The first ever stamp. I'm like, wow, that's interesting. That's amazing. $10 million. So again, owning that in your IRA would be very difficult every year if you were trying to get a fair market valuation for. So I give that funny example because that is, so if you're thinking on, hey, I want to buy, antique cars, or I want to buy that, it's hard for you to hold it directly in an IRA because it's hard to get a fair market value for it. The asterisk next to coin, you are allowed through an IRA to purchase precious metals. In 2008, in the Great Recession, as people would call it, a lot of people were taking their IRAs and buying, what more tangible assets. The market obviously was not doing so well. Housing market probably not doing so well. What was the most tangible asset that people always thought, worst case scenario, I could always trade gold for milk? So people were buying gold coins, silver coins, palladium, with their IRAs. Those are allowed as long as they meet the government's fineness, and your broker will tell you. So if you deal with a broker like IRA Service, Gold Services, Swiss America, some of those brokers, they will tell you that they do meet the fineness requirements by the United States government to qualify for IRAs. Now, who can't you do business with? So this, Internal Revenue Code section 4975 outlines what we call, disqualified parties. And what that means is anyone that's related either directly or indirectly to the IRA. So I'm going to break this list down into, like, obviously it's already broken down into two separate parts, but I'm going to break it down into two separate words called investing and transacting. So everyone on the left side of this list that's under the word related parties, you are not able to transact with. What is a transaction, Daniel? Okay. I am, Ron is my dad, or let's use Ron and Tyler, for example. Ron, Tyler, Ron has a property that he owns, outside of his IRA, 123 Main Street. He owns it. It's doing really well. Tyler's like, man, I would love to buy that property from you and put it in my IRA. Well, he can't because he's listed under that related party, and he would be transacting with his dad, purchasing something from his dead father. Now, I hope everyone knew that you guys were related. If not, the jig is up. Why
can't I be the young guy?
Yeah. And so now let's say that the property next to where Ron owns, 456 Main Street. Ron doesn't own it. It's owned by John Smith. Ron has an IRA. Tyler has an IRA. They can partner together and invest on that property because neither one of them are transacting with themselves to purchase that property. They're investing together. So that is very important to understand the differences of the word transact and invest, because on the right side of that list, it's fair game. I always joke that the IRS doesn't care about stepchildren because they don't, but anyone on that list on the right, you can invest and transact with. So one thing that I always get every year around June or July, hey, Daniel, my kid's going to college. I want to buy a property in Kansas, which I'm going to rent out to 4 other students, but one of them will be my son. You can't do that because why? Your son would be transacting. He's benefiting, receiving a service from that IRA. Now, if it was your nephew, it was your niece, doesn't matter. You can do that. You can rent it to your brother, allowable. So just one thing to keep in mind, when you're transacting or you're going about this, when you do get into the IRA space or alternative IRA space, to keep in mind who you can and can't deal with. So that's pretty much all I have. Those are the meat and potatoes. Now, this presentation is a little bit longer naturally, but I wanted to give a condensed version. That's all the information you kind of really need to just say, okay, I'm thinking on going into a self-directed IRA. I would encourage you, definitely, my contact information is there. Shoot me an email. I did give Kristen also a link to schedule a direct call with me on my calendar. And you're able to do that, and I can answer any questions. We can go through, a specific deal if you have ideas on it. We can talk about the transfer and rollover process, or currently where your funds are held. Someone did ask a question. Do you mind if I answer that question quickly?
Yeah, go right ahead.
Awesome. So they asked, is holding bullion, silver, or gold in an IRA acceptable? Absolutely. So holding any type of precious metal that is sold through your broker in an IRA is allowable. So you have to go through a broker, and the reason why is now let me back up for a second. Precious metals is one of the easiest scams, what I would say, or most easiest asset classification for it to produce fraud. Why? Precious metals is usually like, hey, you send me the money, I'm going to send you the metals. Well, Vantage will send the money, but some people won't send the metals. So what we will do is we require a broker to work with the Delaware Depository, and they act as, we're in a real estate, they act as escrow. We won't send any funds until the Delaware Depository has confirmed either receipt of those metals or movement, if they already have a relationship, movement from their vault into Vantage's vault. And even if they don't directly move it into Vantage's vault, once we can see that they've moved it, then we'll send the money. And it's just a great way to protect investors. So, because we understand the ability for fraud in that asset classification.
Okay. Anybody have any other questions? Go ahead and send them in. If not, Daniel, I know you've got to run to another engagement there, and we appreciate your time today. I hope you guys have enjoyed it. I have a lot of great information, and As far as providing values on the property, we're going to do that for you. As far as the transaction end of it, we'll be doing that for you through the real estate. And so basically, with Daniel setting up your IRA, that just becomes another arm for us to be able to go ahead and put this together very, very easily. And,
Absolutely.
So that makes it an easy deal.
And I will say this too, lastly, before I jump off, I've seen a lot of, I've been here 5 years, and I have seen a lot of clients who have dabbled, who initially just stuck their toe into the alternative space when it comes to real estate. And now they're like, whole neck is in the water, if you want to per se use that, because they do see the benefits. It's you're investing in an industry that most people, it's all great to invest in real estate. But then the minute they have a sale or they're going to make a ton of money, it's now they're worried about the capital gains tax. And so, this is such a great vehicle because you don't have to worry about the capital gains when you're investing, as well as you're building your retirement portfolio while doing so. So it's a great way to diversify and also protect against, the market, because these are non-correlated assets. So again, thank you so much, everyone. I look forward to connecting with you all and meeting those who have additional questions. Ron, Kristen, Tyler, thank you so much. It was a pleasure meeting you all, and have a great evening.
All right. Thank you, Daniel.
Thank you.
Okay, we're going to continue on here. I hope you guys enjoyed that. It was a lot of good information. Like Daniel said, just really the meat and potatoes, and that's really, what it's about on this. And we can always do a deeper dive, and we can set it up, and you'll be getting Daniel's information. He's got it set up where you can go ahead and schedule an appointment with him, and he'll go deeper into your own personal situation. And so we're excited about it. I hope you guys are too. What I'm going to do here is I'm going to drill down a little bit more, and not too deep tonight, but just a couple examples of how this looks as far as in terms of the numbers. Okay. So eligible properties must be in a first bank or another qualified bank's trade areas. Okay. Property must have a positive cash flow. I'll share with you what that is. Okay. It's only from family residence 1 to 4. Okay. And I'll get into the 75% of the rent in a second here. Maximum loan to value, he already talked about that, at 65%, but you also have to have reserves. Okay. And so, like he said, if you're buying a $200,000 house, you're looking at $90,000 all in. Okay. And they must be a non-recourse note on that. Okay. How the numbers work. If you're going to buy a $300,000, 65% would be $195, as far as that would be the maximum loan that they would lend on the property. Okay. Next item. Okay. If we drop down here, it's just continuation here. Don't worry about the 6.5%. That's just, you wouldn't be paying that today. You'd probably be paying half of that. How nice is that? Okay. So this example, they've had it out there for years. But the 195 at 6.5, your payment would be 1233 with P&I. Okay. And your 315 for monthly taxes, insurance payment would be 1548 a month. Now, what they're saying about the rent, if the rent is 2,200, you could only count 75% of the rent. And that ends up being 1,650, as far as what we call a discounted rent, because you have to allow for vacancies, utilities, et cetera, et cetera. So you don't get to count the full 2,200. So on this next page here, you'll see at the bottom here, the 1,650 is the rent after we discount it, and the 1,548 is the mortgage, taxes, and insurance. So it has $102 a month positive cash flow. So this property qualifies. Okay, it's that simple. So if you want to take the 6.5 and put 3.25 or 3.5, then this number is even going to be lower. But this is just an example to show you how IRS looks at this and the requirements you must make. Now, another question of it comes like, well, should I pay all cash or should I get a loan? Well, there's a couple answers to that. Number one, it depends on definitely your age, depends on how much you're leveraged in your entire portfolio. So if you're 60 years old and you're leveraged already at 70%, I would probably recommend that you pay all cash for it. Okay, because you don't have the years to come back again. And the flip side, if you're, 28 years old, and your leverage is, at 40%, and then it's okay. Okay. As long as you have the reserves, because keep in mind, two things on IRAs. One, you could not manage your own property. So you have to have a management company, whether it be Management One or whoever. Okay. So that's important to understand as far as on that. Secondly, if the resident moves out and you have to rehab that property for $5,000 or $10,000, or it's just vacant for a month or two, you cannot use your own funds to help take care of that property. It has to come from the IRA. Okay. So it's really important to understand that. So when we look at clients, we want to know what their leverage position is, what their reserves are, in order to back this up before we're going to even offer you the property. And if the numbers don't work and we don't think it's a good fit for you, we will let you know, which we've done, okay, several times throughout my career, that we won't invest. If you want to invest with somebody else, you could, but we'd rather you didn't. But we don't want to put you at risk if we feel it's just not a good fit for you and your portfolio.